Hey traders, this is Greg McLeod from the Elite Traders University and My Market Heat Map. And we just had a historical move by the United States Central Bank called the Fed. They raised the interest rates by 50 basis points, and that took the market by surprise, and they actually had a big rally in the equities. However, a lot of people have asked me, in fact, Mario asked me, Mario's a member of my Pip Run Forex mentorship, and he basically asked, like, why did currencies like the Australian dollar rally against the US dollar, considering that interest rates usually are the major driver of currency appreciation. So a raise in the interest rates here in the US should mean a stronger dollar. And theoretically, that makes a lot of sense. However, if you would remember, just recall that a few weeks ago, the dollar had been surging strongly against most of the G7 currencies in anticipation that the Fed was going to raise interest rates. So this was more of a buy the rumor, sell the news type of event, in which we saw the dollar rise, at least 2 or 3%, against major currencies, and the pound versus U.S. dollar exchange rate, it dropped, and the New Zealand versus U.S. dollar exchange rate dropped, and also the euro dropped precipitously too. So we already had already baked in that this rate was already baked into the market. So people who were already positioned were now taking profit. So once the actual number came out, we actually saw a reversal from in the market. Now, my traders in our mentorship, Pip Run Forex Scalping Bootcamp, we had used predictive indicators to actually forecast markets before they even move. So, in fact, I took a red eye from Orlando, Florida. I got to visit my friend Joanna, who has a mission helping the homeless in Orlando, Florida, and we were part of a volunteer event, which is really great. So big shout out to Joanna and her team. And what happened was, like, I got in late, got in like midnight, slept a little bit, and then the time change, hour difference in time difference. So I was kind of slept a little bit, and then went ahead and got into the market, and I went short the Aussie dollar, and then finally I realized that I wanted to go long, not short, so I quickly closed that position out and switched it up, and so I lost 2.6 pips on the short, the mistake, the fat finger error. So it was a small error, but I was able to get long the Aussie dollar, and I'm going to show you in this next clip how I made $26,000 in about 15 seconds. Okay, so again, let's go ahead and let her roll. All right, and let's go. Okay, so this is a 5-minute chart of the Australian dollar, and you can see where the red line back there is where I actually got pressed the wrong button, but I quickly got out. Boom, there you go. That was it. 5, 10, 15 minutes, and then boom, the candle broke out to the top side. I got out, and I was able to record that, and 26.6 pips in just 15 seconds or so, right? So Fed raises rates by 0.5 percentage points, the biggest hike in 2 decades. 2 decades. I think I wrote on some article 10 years, so 20 years. And so we actually saw a lot of pressure. You see where I actually took profit there. I was using the C-Trader trading platform. So, and we were able to take profits in a pretty good clip there. So if you would like to find out more about how we use predictive indicators to actually forecast the market, so big news events like that we can take advantage of, then you really need to sign up for the 4 Pillars to 6 Figures, our masterclass, in which I show you what we do. And if you so like to find out more and would like to sign up, we have a limited spots available in our Forex mentorship class. And so be prepared. It's a 5-figure investment, but it's an investment that will pay off, because if you can make several trades a couple of trades like this, it would probably greatly enhance your P&L. Okay, so I look forward to hearing from you. Again, my name is Greg McLeod from Elite Traders University and the My Market Heat Map, saying peace and pips. Happy pipping. Cheers. Bye.